Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today we have a returning guest. It's Jon Hykawy, Head of Global Research, Clean Technologies, and a Materials Analyst at Byron Capital Markets. Jon is also, in my opinion, one of the top rare earths analysts in the entire world. So we're really, really glad to have him back here to talk about the whole rare earths market and what has changed in the last 12 to 18 months since we've had him back on. So thank you for joining us here today, Jon.
Thanks, Jason. Nice to be back.
Great. Now, Jon, the rare earth stocks have gotten a lot of them. We've had a little bit of a recovery in the last couple months, but before that, the last 18 months or so, really since mid-2011, were just rough. We basically, I guess, for lack of a better term, we had a bubble forming in that market where a lot of the salesmen, the paper salesmen in Vancouver, they were running up a lot of these juniors. They got massive financing. There were people calling me and emailing me about companies that were telling me that they were going to go up 20 and 30 times that I had never heard of. So what has happened to the market after this collapse? What has happened in your opinion?
Well, we overshot on the way up. We undershoot on the way down. I mean, that's the way the market behaves. For a while there, everyone was convinced that we were going to see rare earth prices, as far as I could tell, go to infinity because this stuff is absolutely irreplaceable, invaluable. You can't put a price on this stuff. It's so important. And that was nonsense. I mean, we had been calling for much lower prices in the future in 2010, in late 2010, because it's an old marketing mantra, but the cure for high prices is high prices. When you drive prices up to unsustainable levels, people either substitute in new materials or they substitute in new technologies. What we saw since is that substitution happened, demand fell off, the prices have collapsed both outside of China and within China. And as a result of those prices coming down, we now see absolute pessimism and horror setting in the investors, and they're now convinced that the prices are going to zero. That isn't going to happen either. And there's a business that's sustainable, that's long term for some of the rare earth companies. Not 20 of them, not 40 of them, probably maybe 4 or 5 large-scale light producers outside of China, probably between 4 and 6 quote-unquote heavy rare earth producers outside of China.
Okay, yeah, and to add to your substitution point, you're seeing companies like Molycorp, which has done a JV deal with Mitsubishi and Daido Steel, and they're convinced that they can make magnets in 2013 without using that much dysprosium. And then you have companies like Toyota who are basically hedging their bets, and they've made these investments in mining companies like Matamek and others outside of China to diversify their supply, and then they've also worked on substituting out the rare earths to a certain extent.
Absolutely. What we've heard from critical materials procurement people in a bunch of the end user corporations from Fortune 50 on down is they will not allow themselves to be put in the position where they have to depend on Chinese enterprises as the primary source of their rare earths. If they're going to use rare earths at all, they want to have the Chinese as no more than a secondary or tertiary supplier to kind of keep an eye and a price control on a Western supplier. So what they're waiting for more than anything else is Western supply. We've obviously had significant delays for political reasons more than anything else in Lynas turning their production on. We're about to see Molycorp ramp up their operations and start to produce all of the materials that they can produce out of Mountain Pass. And we're waiting for 2013 production from Great Western Minerals Group. So it's going to be an interesting coming 12 months.
Yeah, and I think you said earlier in the interview that there could be a total of about 10 companies on either side, but I think to a point there, I think that 10 companies could be cut in half to 5 or 6, because I think for these companies to survive and for Wall Street to really want to finance these companies, there's going to have to be more of a consolidation period here, because especially with some of these economic studies that have come out 6 months ago for some of the rare earth deposits, they're not accurately the same, because the input costs for a lot of mining companies all across the board, it's not just for rare earth miners, the input costs have gone up 20 or 30% for some of these miners, and then you have the rare earth prices going down, and that really is going to hurt margins.
They have, and obviously the companies that it affects the least are the companies that take as much as they can of the value chain. So companies that are downstream producing magnet alloys or magnets, for instance, if they have a light deposit, be a little more difficult for a heavy rare earth producer to try to move downstream and produce phosphors or a specialty material like that. But for companies that are producing magnet alloys or magnets downstream, they're less impacted by increasing costs of reagents or slightly lower costs for the raw materials. Their value is protected because they're producing engineered materials.
Exactly, and those margins are going to be a lot more stable. There's not a lot of it's not an easy barrier of entry. We've spoke at length about the dearth of technical people outside of China and Japan, really, who can actually make the higher value-added purity rare earth products. And Molycorp just acquired new materials. And then you have the Great Western Mineral people at Less Common Metals. And then you have basically the Stans Energy people. Are there any other firms that can actually do that I'm not naming, really?
I can't think of any off the top of my head. I mean, there are a few other companies, obviously, that could aggregate that capacity in, but they're not in the vertically integrated camp at this point. I mean, you've got companies like Shinetsu in Japan who make exceptionally good magnets. You've got Hitachi, obviously, who are the world leaders in rare earth magnets, and a few others. But it's going to be an interesting 12 months. I think a few of those companies are going to look to start to vertically integrate back to raw material supply, because it's unfortunately for them, it's a necessary evil. It's the material that they require to make the margins that they can with their intellectual property, but they don't have any guarantee in being able to source that material given the issues that are prevalent between Japan and China right now.
That's a very good point. And the Japan-China conflict, because they can use the resource wars to exalt all the other policy decisions, because they're fighting over the islands, which have potentially a lot of oil and natural gas. They're fighting over fishing rights because they need more fish to feed their own people. Mm-hmm. And the rare earth firms are stuck in the middle of all this. And Hitachi, I'm not sure if you're aware of this, but Hitachi has actually been issuing press releases for the last 6 or 7 months, telling people that they already have a JV deal basically negotiated with Molycorp, and that they're going to start building a magnet-making facility here in the U.S. in the next, 8 months or something.
Well, Molycorp does have a phase 2 that they just raised a substantial amount of money for. That's basically going to be mechanically complete by the end of this year. And one of the things that Molycorp management had previously said is they were looking to extend and to gain market share through the early completion of that phase 2. Original plans were that phase 2 of Project Phoenix would be basically built out of cash flow from phase 1. But with Lynas's delays, I believe that's opened the door to the potential for Molycorp to look for some major JVs with some other players in the space.
Very good, yeah. And the stuff that's going on in Lynas, in the past, I liked Lynas, but as more and more information came out about the lamp facility in Malaysia, it's just been like a soap opera. It just seems like a different publication, a different news media outlet, one from Australia, one from Malaysia, New York Times, it seems like it's changing every day whether or not they're going to get their license to store their thorium, and it's turning into a disaster for me. It's not something I'm comfortable with, allocating any personal capital on my own, or telling people when I write a research report that this is a company people should look at putting any capital into.
We've had a sell, I think, on Lynas since we initiated on the stock at a 60-cent target price at present. And my biggest issue with the company has always been that they leave far too much money on the table. That with decreasing raw rare earth oxide prices over time, which is what you have to expect given that the Chinese are not likely to stop production of rare earths, and you're going to have an increasing number of suppliers outside of China. With decreasing prices, you find their profitability is very negatively impacted. But the other issue, obviously, is that political one. With with a very long supply chain and with processing taking place in a jurisdiction where, to say the least, Lynas doesn't have much political control over the environment. It makes it very, very difficult to feel comfortable about putting capital to work there.
Yeah, I agree, and I think Lynas could have easily went and established a vertical integration business model like Molycorp or Great Western Minerals, and they haven't done it. And the beautiful thing about the vertical integration business model is once it's up and running, because Molycorp doesn't have it fully up and running, Great Western Minerals doesn't have it fully up and running yet, but there's a lot of insulation there on the margins, because then you don't need to worry about the volatility as much in the commodity prices, because the margins for the value-added rare earth products are very stable.
Agreed. I mean, you've seen, and it is a revenue multiplier as well as an earnings enhancer. At this point, let's say the price of a kilogram of neodymium in China is $50. It's not at all difficult to find that you could sell a kilogram of low-end magnet alloy powder for around $40 a kilogram, and this is very low-end stuff. Reasonably poor quality overall, but only about a third, actually a little less than a third, of that magnet alloy powder is actually neodymium. You're actually talking about 70% of it, 68% of it is iron, very low-cost material. So your effective price for your kilo of neodymium is much higher. And when you make magnets, you can probably multiply your effective revenues by a factor of 2 or 3 again. So it's a very interesting way to raise your revenues and your earning potential substantially at the expense of, obviously, of developing the intellectual property to do it.
Yeah, and that's very impressive from an earnings standpoint. I think, unfortunately, but besides yourself, some of the American analysts that I've tried to read research reports on for the rare earths industry, they don't understand the vertical integration model still, despite you and me and others doing interviews talking about it, because when I look at their numbers that they crunch out, they're not putting the earnings potential in for the vertical integration part of the business model. They're just assuming that a company like Molycorp is only going to be able to make $300 or $400 million a year just from mining. They're really assigning almost zero value for the vertical integration part.
That's right, and it is a difficult process to develop. It's not easy to make alloys. It's not low cost in terms of capex or opex, for that matter. But there is a substantial margin available. And again, in making magnets, yes, there's an awful lot of intellectual property to develop. But if you either know how to do it or you find a partner who does, a la a Daido Steel with Mitsubishi and using the Sagawa process, or Hitachi with their own patented process, you can make a lot of money doing that.
Yeah, I completely agree, and that's why I've been personally adding to my Molycorp holdings and to my Great Western Mineral holdings. Now, I have a lot of friends who, besides myself, are also holders in Great Western Minerals, so I want to make sure that since you cover the company extensively, we get a chance to actually ask you about updates on the company. Sure. How soon, there's been somewhat of a delay, right, because from the project economics coming out, and there was a delay building the chloride plant in South Africa, right, because they found resource above where the proposed plant was supposed to be.
Yeah, they did. One of the things you want to do is obviously drilling on prospective plant sites before you start building to understand that you've effectively nulled out any resource there, and that wasn't done either the first or the second time that they sited plants. So both times they found extensive mineralization under the location that they wanted to use and had to move the plant. And that's good on one hand, bad on the other. Obviously, it's a delay in construction, but it's a significant expansion to the resource that we'll hopefully see in the PEA. We expect the PEA fairly imminently. I think a good signal as to how quickly that would happen would be the extension of some warrants that were supposed to expire earlier, but only through December of this year. So obviously, the company feels that we're going to get sufficient time to examine the PEA and allow ourselves the luxury of exercising those warrants or not before those things expire in December. Beyond that, I think that's interesting news on its own. Beyond that, the CEO search is ongoing. given what's happened in the rare earth sector, over the last while, I think there's some very interesting people that are becoming available in the space, and so I think the company can find a very, very good candidate to fill the slot permanently.
And how is the ramp up going at Less Common Metals with the vacuum furnaces? Because I know the first furnace, which they haven't ever used before to test to bring, they were buying rare earth metals and then turning them into rare earth alloys.
That's right.
And how are the bugs doing? Are they actually selling commercial products yet for that? And I know they already ordered the second one, and that's supposed to be in a couple months.
Yes. Now, to be fair, I'm actually going to be there at the end of the month, so I could give you a much better update at that point. But as I understand it, they are selling initial product at this time. It's been a slightly longer ramp up than they had hoped it was going to be, but you're working with new equipment. There's always a steep learning curve. These are the same furnaces, though, that are applied by a number of other users globally, including some very, very good alloy makers in China. And the kinks can be worked out. I mean, that's a matter of time and experience more than anything else.
Okay, great. So I definitely think Great Western Minerals is going to be a winner here, unless the management doesn't execute the business plan. I like the business plan a lot. There's obviously some execution risk on the management side if they don't execute the plan, or if there's a delay or something like that. I think they could obviously be an attractive acquisition target for Molycorp or someone else outside of who wants to get into the space.
I would actually suggest one of the more interesting acquisition pathways would be Lynas taking a look at Great Western. You got two producers, both of whom produce monazite, both of whom process monazite, and one doesn't have a downstream capability, where some management members of Lynas have already admitted that perhaps they should have looked more closely at going downstream. So and taking that money that was available off the table. I think that's that also provides Lynas potentially with the ability to basically put some pressure on the Malaysian government and say, fine, if you don't want us to process in Malaysia, then we'll move our processing to South Africa.
That's a very interesting idea. The thing is, where's Lynas? Isn't Lynas short on capital right now, and they have to do another fundraising? And wouldn't they have to raise quite a bit of capital in order to do a buyout for Great Western at any kind of premium?
Well, yeah, it's a risk, obviously, that if it was an all cash deal, obviously they don't have the cash to do it. If it's done with shares, it's a slightly different story. But at this point in time, if they're admitting, if there's any suggestion that they might be thinking along the lines of going downstream was a missed opportunity, now would be the time to rectify the opportunity. It's certainly not going to be available to them at the same price in a year or 2 years.
Okay, very good. And let's transition back to the larger market picture. Do you see any new rare earth products coming online where it could force an increase in the demand side? Or are we just going to have to be content with the increase in smartphone sales and tablet PCs and some of these hybrid cars? The rare earth motors are not in they're not in the battery anymore, right? So they're only in the engine for the hybrids, right?
There actually are a couple of things that I've seen recently. I was asked to speak at the 4th China Rare Earth Summit in Baotou, and one of the other speakers there was a gentleman from a company called Guangdong Winner. And one of the things they've been asked and tasked by the Chinese Rare Earth Society to basically look at alternative uses for some of the more commonly available rare earths. So obviously they're looking at higher value uses for lanthanum and cerium. And one of the things they were examining that was very, very interesting was fire retardants for use in polymers. Typically, you obviously have to add fire retardants to plastics because there is certainly a fairly high flammability risk. But the chemicals that are used typically in the West or in China are fairly complex, fairly expensive, and slightly toxic, especially if that material does start to burn. The use of rare earths, particularly lanthanum, actually allows you to build fire retardants that are very effective, but completely non-toxic. And it's early days. Obviously, they're still looking at it, but they think there's a fair bit of hope for there to be some higher value uses of some of these more common rare earth elements.
That's very interesting. And then you have Molycorp, which is trying to commercialize. We haven't gotten a lot of data yet on Zorbex and how successful they've been commercializing. And I believe they're trying to sell 1,000 tons in the next worth of Zorbex in the next 12 months. And then you have the Ames Laboratory, I think, which was also trying to test magnets out of cerium.
That's right. Yes. Yeah, there are a number of opportunities there. As far as Zorbex is concerned, it's an interesting product. It does work reasonably well. The Chinese, though, did try to produce similar sorbents in the past and found it difficult to sell into the water treatment industry, even in China. Now, if where you do have significant sales of more conventional materials like ferric chloride, if you're finding it difficult to sell water treatment chemicals in an area with some of the dirtiest water in the world, some of the most pressing need, you have to question how easy it's going to be to sell anywhere. So we haven't built a lot of revenue potential into Molycorp's figures for that. We're quite comfortable with the revenue that Molycorp can generate off of the sale of rare earths generally, and off of the sale of magnet alloys and magnets. As far as some of the other areas of research, like the use of lanthanum and cerium in magnets, that was tended to be predicated by the tight availability of neodymium and praseodymium on the one hand, and much higher prices of neodymium and praseodymium on the other. As the prices have retreated, in China right now, you're selling a kilo of neodymium for $57. Outside of China, not that long ago, it was, in mid-2011, it was $500 a kilo. As those prices retreat, you'll get less pressure to try and find inferior alternatives to use of neodymium and praseodymium.
That's a good point, and also because you mentioned the price drops, you've just had a lot of the prices, especially for the lights, drop so much where the Chinese producers can't even make a profit really producing them. So I think that's why, right, China's been consolidating the sector. They've been tweaking the export quotas, trying to make it so the sector is more consolidated and can actually produce a profit and stabilize the prices at a little higher level.
It's going to be a very, very interesting space over the next little while, because one of the issues that we've actually spoken to the Chinese industry directly about is that they're about to enter a competitive environment that they've never seen. The Chinese rare earth industry is about 30 years old, effectively, and for that entire period of time, they've had a significant price advantage over any of their competition. They were able to drive most of the competition out of the space through their ability to saturate the market, to saturate global demand, and the fact that they basically were able to take advantage of lower costs of production in China, not just lower labor costs, but lower costs generally, while at the same time applying modifications to the technology to maintain that cost advantage. What they're about to enter is a competitive environment where companies like Molycorp are applying new technologies that are significantly newer than the technologies that are applied today in China. That in turn should give Molycorp the ability to produce at a price that the Chinese can't touch. And suddenly you're going to have a situation where Western suppliers are perhaps at price advantages compared to some of the Chinese supply, coupled to an environment where Western buyers, non-Chinese buyers, would rather buy from non-Chinese suppliers because of the surety, the reliability of that supply. It's going to be a very, very interesting dynamic.
Very interesting. So let's wrap up the interview here with the whole rare earth market in general, with the supply side, the demand side, and then maybe your outlook for some of the companies. On the supply side, it looks like Molycorp, Lynas, if it ever gets approval with the thorium tailings,
we should
and
know
it
in a
gets
couple of days, I would suppose, but yeah.
Okay, well, Lynas with that, and then Great Western Minerals, probably by the end of 2013, are going to supply the market with probably as much lights as it needs. What type of room is there for more light producers besides those three?
Well, there's always room for good suppliers, prevalent suppliers of neodymium and praseodymium. The wonderful part about the wind industry is it effectively, at prices of neodymium, praseodymium below $80 or $85 a kilo, it's pretty much a bottomless pit in terms of soaking up that demand. If you have a deposit where you can make money selling your neodymium, praseodymium, and maybe a few other things, and maybe absorbing the loss, that you're going to suffer on the lanthanum and the cerium, there's room for additional suppliers in the space. We think that number probably tops out, at no more than 5 suppliers outside of China, but there is a bit of room. The interesting thing is really on the heavy side of the equation. We think the relative proportion of dysprosium required in magnets is going to decrease over time, but that doesn't mean it goes away. And we do need suppliers of heavies, both for magnet use as well as for phosphor use, outside of China.
And for the heavies, for those guys producing concentrate, how important is it for those guys to be able to make heavy rare earth oxide instead of the concentrate? Because I spoke to one of the CEOs in the rare earth industry. I spoke to the Frontier Rare Earth CEO, and he told me it's a humongous leap to be able to go from concentrate to rare earth oxide, especially on heavies. And if you can make heavy rare earth oxide, you have a humongous customer base. You can sell it globally. But if you only make heavy rare earth concentrate, it's got to go back to China, sell. The Chinese know it, and then they're going to ding you really bad on being able to make a profit.
Yeah, there is a leap, obviously, but it's not it's not insurmountable rocket science. We understand how to do solvent extraction, and our understanding is better as companies like Molycorp and its Material acquisition, Lynas, Great Western, and Ganzhou Qiandong, as those companies start to roll the technology out into the West. So that part tends to solve itself over time. It's an expensive process. It's capital intensive as well as operationally intensive, but it's not insurmountable. I think there's a number of companies that are looking to alternatives as well to solve that problem. For instance, Ucore has been working with an American company called Intelemet on an alternative separation technology, which, for lack of a more concise way to describe it, can be thought of as something like ion exchange on steroids. Ion exchange is widely used to polish rare earths to saleable grades after some initial solvent extraction, some rough separation. But it's never been used for final processing from concentrate because it's too slow. It would require too much material. It would basically be too capital intensive and have too high an operational cost associated with it. This new development by Intelemet actually might promise to be lower cost on an operational basis, on an OPEX basis, than solvent extraction. But from a capital cost point of view, it also looks to be very, very cheap. So it may well be an interesting development, but it's not commercial today. So there's a bit of a bet there on the part of Ucore and other companies that might be examining it, that this can be developed relatively quickly.
That's interesting, and I think that's Ucore's using that new process, and I guess that's why they pushed back, because I know they're originally planning on trying to get into production in late 2013, and I never thought that was a really realistic goal, no matter what red tape the U.S. government and Department of Defense cut through to let them in. So what about other processing cracking techniques like Stans Energy's process and about Orbeat aluminum? Are those guys going to have success producing those things at a profit, or is a company like Stans with really, really low-grade ore, are they going to have such high input costs that it's not going to give them a lot of profits?
We don't cover Stans. I've never been a fan of the deposit generally. The issue for me has always been that it is very low grade, and that the Soviets when they were drawing material from that region were effectively operating the plant at something of a loss. For them it was a strategic material rather than a commercial material at the time. They simply had no other source for it. That's not at the high cost that we were seeing for being paid for heavy rare earths in 2011, in mid 2011. You wouldn't have had too much difficulty making money. At our long-term price deck for heavy rare earths, with some of these changes in dysprosium demand and some other things being factored in, it's tough. As far as a process like that developed by Orbit goes, we do cover Orbit. We have a sell recommendation on it and a 90-cent target price. Our biggest issue is, again, it's a very, very low grade. And if the process works the way that it's intended to work with our price deck thrown in, the company, to say the least, doesn't make, money hand over fist.
Do you also think then that, sorry to interrupt you, but do you also think then that Orbit would be able to earn additional revenue streams than licensing out the technology to a Quest or an Avalon or some miners like those guys? Because I've heard other analysts talk about that, but I haven't actually seen that many facts proving that it can be done.
Yeah, Jason, I'm not sure how technical you want to get, but our biggest concern with respect to the process is that one of the things that's required in the smelter grade alumina processes developed by Orbit is you are going to deploy solvent extraction to separate out the rare metals and the rare earths from one another and turn them into saleable end products. To be able to do that, though, you have to effectively separate off the iron that's in your leaching liquor before you apply the solvent extraction. Otherwise, you're effectively got a mountain made of hay, made of straw, of iron, and you're trying to pluck a couple of needles of rare earth out from underneath it.
So it sounds massively inefficient and massively expensive.
Your solvent extraction process would be far too costly to be able to do it economically. So what you do is you apply a technique that Orbit has discussed extensively in their PEAs called hydrothermal hydrolysis. Hydrothermal hydrolysis requires specific knowledge of the material coming in, its pH, its ionic content, all of the rest of it. If you know that very well, you can apply this technique. You take advantage of the solubility curves of materials, and you can do something like precipitate out most of the iron while leaving the rare earths in solution. The result is you have a solution with much higher grades of rare earth in it relative to iron. You can now apply your solvent extraction cost effectively. The problem is solvent extraction works fine, hydrothermal hydrolysis has never been demonstrated to run continuously in commercial operation.
It's very interesting. So, Orbit aluminum, the technology is very, very unproven because that's what it sounds like.
We think it's risky, yeah.
Oh, okay. Well, in closing things here, Jon, I just want to thank you for being on a podcast here and for outlining the whole entire rare earth sector with us. It was great. And can you please tell our listeners more about your work and where they can find you?
Sure. Byron Capital Markets is a boutique brokerage in Toronto that specializes in what we term electric metals, which are materials that are necessary or at least desirable for the electrification of transportation fleets, whether that be small-scale e-bikes in China to fully electric vehicles in North America. We look at a wide variety of metals and materials, including some of the stuff that it takes to generate electricity, like uranium. They can find our work on our website, which is basically www.byroncapitalmarkets.com. Follow the research tab and register, and you can take a look at anything that we published.
Great. And thanks again for your time.
You're welcome, Jason. Thanks very much.